Hyperscale self-builds are impacting colocation demand in a meaningful way and shaping data center operator strategies. Joining me now at Structured Research's Infrastructure 2023 Summit is Chris Downie, CEO of Flexential. And Chris, thanks so much for talking to me.
Thanks for having me.
I know this is your first time at this conference in Toronto, and you're having a good time so far. So
yeah, no, I've heard of this conference for many years and just haven't been able to make it. But yesterday's content was terrific, and I'm looking forward to today as well.
Yeah, and you lucked out with the weather, so because for Toronto this is quite warm for this time of the year.
Yeah, no, I certainly appreciate that.
Let's talk about hyperscalers and how that's impacting the market that you operate within. So hyperscale self-builds are changing the game. But what is the momentum around that? And is this a trend? Is it a hype? Is it going to really change things? What's your view of the state of the market?
Yeah, well, obviously hyperscale demand is tremendous, and it's been tremendous for at least the last 5 years, and in many ways it's accelerating. So it's certainly impacting where developers focus their time. The interesting thing for us is Flexential doesn't solve for large-scale hyperscale kind of build-to-suit workloads. So there's but our business is actually growing, I'd say, tremendously as well. And so there's a dynamic where there are demands that are not hyperscale that are significant and causing growth to expand beyond just hyperscale.
Okay, so then when we will look into the colocation guys, the operator side of the sector, how is all this changing the way they go to market, and how does it change the relationship that they have with the hyperscalers?
Yeah, so for us, we have 41 facilities in 19 markets. Mm-hmm. Those markets, had sort of traditionally been called secondary markets, but in today's demand environment, there's nothing secondary about them. Our markets have a fair amount of the raw material required for data center development and land and power and network, and now they're increasingly being appreciated as a destination that's just as good as what were the primary markets. So in many ways, the secondary markets are now the primary markets. So I think what's changing is that there's an appreciation of the migration of consumption to our markets and several others, and so there are those that are looking to meet demand where it's willing to go. The other thing is it's not our form factor of a data center of 7 years ago was maybe 5 to 10 megawatts. Today it's 36 megawatts, and so for us it's really about scale at the edge, because our 19 markets we sort of view are we have the more geodiverse platform in the US relative to anybody else, and so we're very much building scale at the edge.
Very interesting, and this is the edge at scale, and we're going to talk about later in this conference. There's a panel around the hyperscale edge, or the edge hyperscale, and what you just said about the 5 megawatts going to 36 megawatts. It's a tremendous shift.
Yeah,
that has happened in the last 24 months, 36 months?
Yeah, I'd say 24 months. Yeah. And the interesting thing is, as I mentioned earlier, we're not solving for that large-scale hyperscale. Clearly, hyperscalers are migrating to, I'd say, the new primary markets as well, but there's a whole host of demand, this new GPU, effective cloud infrastructure. Obviously that's supporting a lot of AI applications, and that that is a bit more location agnostic, but it still needs the power resource, and it still needs the network resource, and that's where really our 2 decades of being in our markets and building those resources is meeting the demand very well.
And we'll touch on the markets in a second, especially the T2 markets, because it's very interesting. But you've already touched on AI, and AI is the topic of the moment. Every panel that you're in, people talk about AI, more AI than anything else, like sustainability and power even. What's your view on AI, and how is AI going to change the game? It's already changing, but how is it going to change further over the next 24 months?
Yeah, I'd say the pace of play of AI has been faster than I've ever seen in my career. It really sort of came onto the landscape at the beginning of this year, and has commanded the attention of our industry to solve for what is more significant compute demand than we had seen in any annual period beforehand. And so I think the view is that's going to continue to accelerate, but really accelerate as fast as it can, because data center development takes time, and there might be a situation where the ability to meet the leaps and bounds of AI compute demand is constrained, at least for a period, but there are going to be many of us that enjoy that demand set.
Very interesting. And then how is that going to shift towards the tier 2 markets and the new markets, so the locations? What would you say are the new locations of opportunity, and how is AI going to move the needle?
I'd say in some respects that's sort of where it started. So there were constraints in markets like Santa Clara and Ashburn starting 18 months ago, and so as that demand for compute came onto the market, there wasn't availability in those markets, and so in many ways that compute started in, again, what used to be called tier 2 markets, because we're very much the tier 1 markets of that consumption set, and so we've been developing fairly significant capacity for us. So we have 110 megawatts under development in Hillsboro, Oregon, which has been one of the fastest growing markets in the country for the last 2 years, not the largest, but one of the fastest growing. Also in Atlanta, which is a large-scale alternative for Northern Virginia, and then Denver has been a home market for us. And so in those 3 markets, we've got large-scale capacity under development, but right now I'd like to be developing across all of our markets if I could.
Yeah, I was going to ask, as you already mentioned, you have 41 data centers in 19 markets, and you just mentioned the under development capacity that you've got currently going on. But what's the roadmap? And are you going to stick to the US, or will you venture outside the borders?
I think at this juncture we're seeing enough demand in the US, and we've got such tenure in our markets, such market share in our markets, that we'll continue to sort of leverage that and take advantage of that over time. So you'll see us continue to scale in Hillsboro, Atlanta, and Denver, but hopefully you'll see more large-scale capacity in the other secondary markets that we're in, like Raleigh and Nashville and Charlotte and Salt Lake City and Vegas, and the list goes on. But those are all recognized high growth population centers. They have been for a long time. We've been in those markets for 15 to 20 years, and so it's really about introducing scaled solutions into these markets that have been data center markets for a long time, just not as large as Northern Virginia or Santa Clara or otherwise.
Okay, and because we are now in the third quarter of 2023, it's now time to talk about next year. What will be the key strategies that Flexential is going to be focusing on for 2024?
Yeah, so we've been able to capture a lot of the demand that's been coming, to our markets at greater speed than before. So, we've sold a lot of our capacity over the course of, I'll say, the latter half of 22 and 23. We've got 110 megawatts under development, but that is actively being pre-sold. So it's a long-winded way to say that we've got a lot of revenue air cover, if not, predictability for the next 2 years. So it's really about making sure that we develop a capacity for the next 5 years, beyond those 2 years, and also making sure that we're continuing to, evolve the strength of our interconnection platform, which, I think in the AI world is going to become just more increasingly important in scale. Mm-hmm. And so our nationwide fabric of network resources has been scaling for quite some time, and so we're going to try to position that scale in front of those demand sets, and we'll think they'll consume them faster than anybody has in the past.
Okay, can you give just a brief overview of how all this is financed? So what's coming from revenues to help build the business back? What's coming from investors? What type of investors are sponsoring you as well?
Sure. So we're currently sponsored by GI Partners. It's private equity, but I think this industry has been increasingly, funded by, infrastructure capital. So, I like to think we're on a journey towards, that domain. We finance a lot of our business, one, organically, as you mentioned, so cash flow from the business, and that, we're north of 200 million in EBITDA. So there's a fair amount of cash flow that comes from the organic business, and that's growing quite nicely. We also did a large-scale ABS at the end of 2021, and that's a vehicle that's built for generating additional liquidity, both from the growth of the business, but we only contributed, I think, 26 of our 41 assets, and so as we complete development of an asset, we'll contribute it. That'll provide additional liquidity, and then, hopefully that'll be a conveyor belt for the future.
No shortage of cash for expansion.
Yeah, well, we have a lot, but as I mentioned, we've had to prioritize, into let's say 5 or 6 markets, but I would argue almost all, if not all, of our markets are candidates for, I'd say, new scale that, given the migration of consumption to to more, I'd say, less traditional population centers, we have the opportunity to develop, but also pre-sell. And I think once you start in a market, then it's recognized as a destination and will continue to expand.
And I think that's the beauty of this industry, even if we look at it from a real estate perspective, is that pretty much everywhere you point on the map, it could be something, and the demand is there.
Yeah, I think that's right. I mean, clearly, given the power constraints in the traditional markets, it's logical that there would be migration to where power is. But I think the other thing that's necessary is network, sophisticated network resource, and that's where what Flexential's been doing for close to 2 decades now comes into play. And that, whether it's Atlanta or it's Nashville or it's Raleigh, we've been there for 2 decades, and we have, I'd say, arguably more carrier density than most, because that's where the carriers found the enterprise. And so I don't think you could just pick any one spot, and if it didn't have a network resource, then it's going to have challenges. And I think there's a certain level of latency relative to population center. So everybody at this conference, as it relates to AI, talks about training and inference. And training, I think, is more location agnostic, where inference is needs to federate and interconnect at scale, and that's where really our value proposition comes in.
Interesting. And then, so of course, we are at this conference, Infrastructure 2023. When we come back in 12 months, what's the one thing that you expect the market to have done, to have shifted? One big event do you expect to have taken place in 12 months' time by the time we meet here again?
Well, I think everybody here is talking about, the scale of development, the challenges of development. I don't think in the next 12 months some of those challenges will go away. So I think we'll just have to continue to manage the development of our platform expansion, as dynamically as we can. I think a year from now you'll hear more about challenges of getting in, finding the power needed to support the use cases. But I think there are changes going on now in terms of, I mentioned one like pre-selling, but given the demand-supply imbalance, meaning there's not enough supply to meet the demand, we're actively seeing pricing elevate from that. And so it's interesting, something that's priced at like 110 plus E today, a year from now could be 125, 140. And so how do you, as a developer or a service provider, capture that economic opportunity? And I think our model is well fit for that. So I think pricing perhaps could be on the forefront of the conversation, because it may not be as impactful to the hyperscaler, but it's definitely going to be impactful to everybody else. And what I've been trying to make sure people appreciate is that I know hyperscale is huge. It sucks the air out of the room as it relates to the conversation around data center demand, but there's a tremendous amount of demand from traditional enterprise, from this new AI GPU, and then hyperscale edge itself. And so let's not forget about all the other great growth that's going on.
No, you touched a very interesting point, because we've seen even startups coming up, especially in Latin America, that really just focus on the smaller side of the market, 1 to 3, 5 megawatts to really serve enterprise and very specific needs. And it's something that we don't really talk about that much. And it's our own fault as well, because we have the platforms that we could be talking to, but we always seem to just focus on the bigger guys, the hyperscalers, the Magnificent Seven, as someone called them this morning.
Yeah, and obviously a 300 megawatt facility or a gigawatt facility development is a scale that captures attention. But I'll be happy developing as many 36 megawatts facilities as I can, and bringing in great customers across technology, financial, healthcare, GPU middleware companies. And so, while a lot are distracted by, what's a massive opportunity for them, there's few of us that will enjoy the massive opportunity that's the rest of the world, if you will.
It's all about focus and inclusivity.
Exactly.
But Chris Downie, CEO of Flexential, thank you so much for talking to me. As for your home, thank you for watching, and do check our website and give us a follow on social media for more timely news from the digital infrastructure sector worldwide. At the Tech Capital, you lead, we report. Bye for now.